How's it going, guys? Welcome back to another video. Thanks for tuning in to Stock Essentials. My name is Alex, and today we're going to be going over a pretty nice strategy to kind of capitalize on double dividend income. This is one of my favorite strategies to do on my stocks, and what it is you choose dividend stocks that you don't mind holding for the long term, and you collect dividends on that, but you also sell covered calls either weekly, bi-weekly, monthly to kind of add another source of income alongside the dividend income. That's why we call it the dividend income. We sell covered calls against our shares, collect some premium, and then we basically double our dividend. Covered calls, they actually give a little bit more money, more income than dividends itself. So it's going to be a nice addition. And you can do this with any stock. Covered calls are one of the best strategies to collect some nice income, consistent income. But it's also not only for dividend stocks, but you could do it with any other growth stock as well. So covered calls is a great strategy, and we will be getting into it. So what is a covered call? It's a popular option strategy used to generate income in the form of options premiums. So instead of buying call options, we're going to be the ones selling the options, writing the calls themselves. And to do that, you need 100 shares of the underlying stock. So for example, Bank of America, if you want to sell calls on this, you will need 100 shares, which is around $3,800 at this current price point. And then you can go ahead to the options chain and then hit sell, call, and then choose your expiration date. You could do anywhere from a week, 2 weeks, month out. For this example, we'll just select August 30th, 13th, which is a few weeks out. And we'll head over to the options chain. And as you can see here, if we sell a $40 sell $40 covered call, we will receive $25 of premium. Now that may not sound like a lot, but $25 every single month, every single few weeks, it adds up, and then you can use that to reinvest back into the stock and create that nice compounding effect. Because not only are you going to be receiving $25 every single month for selling covered calls, but you're going to be receiving a nice dividend yield as well from these stocks. In this case, it's going to be 1.9%. So I've chosen 3 stocks here, Apple, Bank of America, Coca Cola, just as examples because they are Warren Buffett's favorite stocks. He has gained a lot of profit over these stocks in the long term. Apple being a huge amount of money he's gained in capital gains. Apple, Bank of America, there's also American Express, Coca Cola, and then there's also Moody. Those are his top gainers, but for this example, we're just going to select 3 of them: Apple, Bank of America, and Coca Cola to sell calls on. Apple is going to be a little bit pricey. In order to buy 100 shares of this, you're going to need around $14,000, $15,000. So it is going to be for bigger accounts out there in order to sell covered calls. And Apple is a great growth stock. It's one of my favorite stocks to hold in my long-term Roth IRA portfolio, just because of how steady the growth is. As you can see, the 5-year chart, nothing but steady gains, and they're always innovating. They're a great company, and they have a lot of loyal fans for Apple as a company. So the dividend yield is not that high, 0.57% dividend yield. So you're not going to be receiving a huge amount of dividend, but it is a great growth stock, and it is Warren Buffett's one of his favorite stocks out there. So if you want to sell covered calls, if you do have 100 shares, you can head over to the options chain, sell a call, and you can do something like let's choose our expiration date. Let's go a month out. So this means that we'll be collecting premium every single month just for holding the stock and selling calls every single month. So we can go pretty far into the strike prices. So if assuming you want to sell, assuming you want to keep Apple stock for long term, because remember, if Apple goes above your strike price, you have to sell 100 shares, your 100 shares at that strike price. So if Apple goes to, say, $165 and we sell a $160 call option, then we're still going to be having to sell 100 shares at $160 each, even though Apple is at $165. So that is the risk with selling covered calls. It kind of caps your profit. But we still do make a nice capital appreciation from 147 up to 160. So that is a very good plus for you as well. For selling $160 call a month out, we're going to be receiving $87 of premium. And I know a lot of you have a lot of shares, and you're looking for ways to collect some weekly or monthly income, and this is one of the best ways to do it. Choose a far out strike price depending on how bullish you are in the stock, and sell some calls against it. $87 every single month, it adds up, and you can use that income to buy more shares of the stock, reinvest it, and it creates that nice compounding effect along with the dividend yield that these stocks provide. Apple, they pay out quarterly, and they pay out 22 cents per share every quarter, which is every 3 months. So if you own 100 shares of Apple, you're going to be collecting $22 in dividends every 3 months, which is kind of low, but it is a nice addition to Apple offering that dividend in the first place. So selling a covered call will help give you some even more. It'll give you even more monthly income just by selling calls. The next stock is going to be Bank of America, of course. It's better for those with small accounts. A lot of you have accounts under 5,000, under 10,000. So Bank of America own 100 shares. They do pay out a pretty decent dividend yield of 1.9%. And their dividend yield is going to be around $20 per share. 20 cents per share. So if you own 100 shares, you're going to basically get $20 every single quarter. These are all quarterly paying dividend stocks. If you guys want an analysis on some monthly dividend paying stocks, leave a comment down below. I'm a huge fan of dividend investing, and I love collecting dividends for consistent income. But Bank of America actually pays a similar amount to Apple, and for a fraction of the price. So it's one of Warren Buffett's favorite stocks, and for good reason. Charts look pretty good, and it's recovered pretty nicely since the pandemic crash. So Bank of America paying almost a 2% dividend yield, and they pay out quarterly as well. So if you want to sell option of this, let's head over to the August 20th strike price, expiration date. Doing monthly covered calls is a nice strategy to capitalize on some nice premium. You could do either like a $40 strike or $41 strike and collect a second quote unquote dividend, if you will, every single month. So a 40.5 strike will give you $26 of premium every single month, which is more than the actual dividend itself, which pays around $20 every 3 months. So we're going to be making $75 every quarter, and then another $20 with the dividend added in, and then we can continue to sell cover calls and collect those dividends, and then reinvest it back into the stock, and of course buy more shares with that. And then if you get another 100 shares, you could sell even more covered calls. It creates a nice compounding, snowballing effect to grow your accounts. Next stock is going to be Coca Cola. This is also good for semi-small, medium accounts. 100 shares you're going to need $5,600. Coca Cola is a really good company. It's one of the biggest beverage companies. They pretty much have a monopoly on that, alongside Pepsi Cola. But they pay out a nice dividend, almost 3%. So this stock is one of the most popular dividend stocks for dividend investors because of its nice dividend yield, as well as a nice growth in the stock price. So it's almost recovered back to its pandemic highs. So there is a lot of growth potential still with Coca-Cola, and it's a nice, safe stock. Coca-Cola definitely is not going anywhere, and they have a lot of people hooked onto their beverages. So Coca-Cola, they pay out a nice dividend of 42 cents per share. If you own 100 shares, it's going to be $42 every single 3 months, every single quarter. In addition to that, we can sell a covered call against it. Let's choose August 20th expiration date, a month out. And we can do something like say a $58 strike price. So you will collect around $28 of premium. Coca Cola is a pretty stable stock. It doesn't move very much, so we can safely sell a $58 strike for $28. And we can do that every single month, collecting $28 of premium. In addition to that juicy $42 of dividend every quarter. So that you're going to be able to collect some nice income that way, as well as reinvest it back into the stock and own more shares. And then eventually, when you get enough shares, you can sell even more covered calls. You see where I'm getting at. So that's one of my favorite strategies that I do my personal accounts, collecting dividends and covered call premiums as well. So leave a like if you want more videos like this for passive income, weekly, monthly income. And comment down below what your thoughts are, and if you have any more video suggestions. And of course, subscribe if you're new to the channel. It helps out a lot. Thanks for watching.